Good morning, traders. Today, I'd like to provide a brief update on recent movements in global markets, focusing on the US dollar, oil, gold, and the Australian dollar for October the 14th, 2025. Let's start with the US dollar. So on Monday, the dollar index climbed back above 99, bouncing back from earlier losses as President Trump eased tensions by pulling back on his threat to impose major tariffs on China. This comes amid a broader backdrop of global political uncertainty, including the ongoing US government shutdown, political shifts in Japan, and the deadlock in France. So while the dollar posted its strongest weekly gain in over a year, it dropped over the weekend as fresh trade disputes resurfaced. The dollar is currently struggling to break through the psychological barrier of 100, held back by weak US Treasury yields and a lack of new economic data. Unless the Federal Reserve adopts a more hawkish tone, the dollar's upside potential in the short term appears limited. Now, let's turn to crude oil. WTI began the week around $59.40 per barrel, rebounding nearly 3%. This follows a sharp decline caused by a perfect storm: Trump's tariff threats, increased supply from OPEC in the Americas, and easing geopolitical tensions, especially in the ceasefire between Israel and Hamas. However, despite this rebound, oil's look technically remains bearish. Prices have broken below key support levels, and indicators like the MACD are showing signs of weakness. If oil breaks below $57.90, it could fall further, possibly to $54.78. Market sentiment has clearly shifted, and investors are watching closely for further signals, particularly if there's any changes from OPEC and their signs over the week. So, shifting to gold, we've seen a historic milestone. On Monday, gold surged past $4,115 per ounce, reaching an all-time high. This jump is driven by renewed US-China trade tensions and growing expectations of a Federal Reserve cut. In fact, markets are now pricing in a 97% chance of a rate cut in October, with another expected in December. This isn't the first time gold has surged in times of crisis. We saw similar movements in the 2008 financial crisis and in the COVID-19 pandemic, and now again amidst this rising global uncertainty. Technically, gold is still in bullish territory, but any break below 4,000 could signal weakness ahead. Conversely, a push above 4,125 could trigger another rally towards the $4,200 mark. Finally, a quick look at the Australian dollar, which rebounded to 65.30 after last week's sharp decline. This comes as investor sentiment improved slightly following President Trump's more conciliatory tone on China. In a Truth Social post, he reassured markets, saying everything will be fine regarding trade. On the domestic front, Australia is waiting on key labour data and central bank communications, which will likely shape the Reserve Bank's next moves. Technically, the Aussie-US pair is trying to establish a bullish recovery, though resistance remains at the 20-day moving average near 65.87. A break above this could spark momentum towards 66 cents, while a failure might push it back down towards 65 cents, or even as low as last week at 64.72. That concludes today's brief. Watch for upcoming Fed comments, any OPEC headlines, and developments on the US political landscape, which will all be potential market drivers for this coming week. Thank you.